Good to see you in here. Hey, Steve. Nice to have you. Morning, Jeffrey Dean, Zorro. It is like an elite list of the who's who in day trading. Hey, good morning, Sid. All right, guys, let's do it. Hey, what's going on, Ron? Do we have a new face in here? We've got the Iceland Troll. I haven't seen that name before. That's a good one. Morning, Jerry. All right, guys, we're going to do it today. I feel good. Day one for Lonnie. Welcome, Lonnie. Nice to have you. How do you know that, Ron? How do you know this is Lonnie's day one? I didn't get the memo. You're you. That's all we need to know, huh? Awesome. Guys, I hope you're having an amazing morning. I know I am. Gonna check news today, guys. Make sure, see what's going on. Hey, Erla. See what's happening in the wonderful world of emotional responses, guys. I go to forexfactory.com/calendar every day. This is not an endorsement for them or a desire to get you over to their site, but what they do is they let me know when there is high impact news coming, guys. And high impact news can move the market. It can make investors react emotionally. It can bounce it around, change directions. Honestly, it just kind of takes a little bit of the smooth out of it. So when news is coming, guys, when high impact news is on its way, like there was at 8:30 unemployment claims, right around 8:20, I stop. That's it. I go cook some breakfast, toast a bagel, eat a waffle, play with the dog. I do anything other than throw myself in front of that emotional response that may happen. And talking about the ultimate emotions, guys, today is FOMC Day, which means at 2 o'clock, the federal funds rate news comes out. The FOMC statement comes out. And guys, your markets are going to look like a seismograph. Sometimes for 2 minutes, sometimes for 2 hours. Hey, what's going on, Bob? Good to see you. Man, I'll tell you what, welcome back. 4 years in, I love it. Man, if there's anything I can do, be vocal. Be vocal. Morning, big dog. Can't stress that enough, guys. I teach the basics every morning, right? We talk about the basics every morning, but this class is for everybody. All you have to do is ask a question. I'm finally starting to get pretty good at this stuff, so usually I give pretty solid answers. I try to anyway. Guys, once I check news, I take you over to the Nexgen page. This is where all the answers come from. I don't make stuff up. I introduce observations maybe outside of some things, but I don't make stuff up, guys. The core education for Nexgen has been in effect for 20 plus years. And that's really what we talk about each and every morning. And from the trading guide section, there's a glossary of common terms. And this takes you to exactly what I focus on for the first hour each and every day. Because I don't care how talented you are. It doesn't matter to me how long you've been trading, how new you are, how old you are, guys. Having a high probability scenario is awesome. Because when you're looking for high probability trades, guys, each indicator on every chart agrees for the trade. Triggers are their strongest, no termination conditions exist, and guys, there's nothing between you and your target. This is the best of the best. This is, this is the feel-good trade, I guess is the best way to put it. So for the first hour, I talk about a high probability trend trade, which shares all the characteristics. Strong triggers, no terminations, nothing between you and your targets, guys. In this high probability trend trade that I teach each and every morning, guys, this is a trade that typically wins 70 to 80% of the time if you're following the rules. This is a trade that creates an enormous amount of confidence because of the success rate. And guys, this is a trade that teaches you to read your indicators. And really, that's the whole goal of this classroom. Is to get you to a point to where you can read your indicators, where you can look at your charts and just know whether or not you've got what you need to take a trade, guys. And once you start getting good at reading your indicators, You're going to understand where the market is likely to continue, where the market's likely to go, where the market's likely to stop, and these things are going to jump right off the page at you. 90% of your day is going to be spent reading indicators. 10% of your day is going to be trading. And it seems crazy, right? How could I make any money in the market if only 10% of my day is trading? Guys, once you have a plan, once you grab hold and you trust your plan, you'll see how that 90% comes into play. And what you'll realize is that the most successful traders that you're going to see in this room, that you'll meet out in life, the most successful traders are the people that can do absolutely nothing when there's nothing to do. The people that don't jump in because they feel like they have to be in a move. The people that don't take trades because they're afraid that the market's going to go without them. Guys, when you have a solid plan, what happens is you develop this patience and you feel good about it. And you don't mind not being in the market because you know that another one's coming. So we're going to focus all on reading indicators for an entire hour. And we're going to do it with this highest probability trend trade, guys. This is the trade that teaches you to read them. This is the trade that typically wins 70 to 80% of the time when you follow the rules, guys. This is the trade that only has 3 rules. How easy is that? Each rule gives you an advantage when it's true. Excuse me. Your large chart must have strong triggers. That's rule number 1. This gives you the advantage of momentum. The large chart must have no termination conditions, none of those likely to stop areas. This gives you the advantage of a clear path. Guys, a clear path gives you room to your profit targets. What a great thing to have. Once you understand momentum and clear path, you have everything you need. I believe this from the bottom of my heart. Once you understand momentum and clear path, you can create a plan for yourself that's consistent, that's profitable, that wins more than it loses, guys. You've got that core of what you need to be successful with this software. Only 2 rules, 2 concepts, 1 chart. Once you have these 2 in place, what happens is you're going to begin to find your entry. And guys, I'm going to type that into the room in all caps. You're going to find your entry. You're going to find your entry based on what makes you comfortable, what pops out to you, what makes sense to you. In the beginning, I'm going to give you an entry, and this entry is specific to the highest probability trend trade that we teach, guys. And this entry is designed to reduce risk. It's designed to maximize profit potential. It's designed to show you precisely where the market is most likely to continue. These 3 rules come together on only 2 charts. And here's the cool thing. On the large chart, you can use the most current bar to define the direction of the market, and this is going to tell you which way you should be looking for your rules to be met, whether it's a long trade or a short trade. It'll define the momentum in the market through rule number 1, making sure that you have those strong trigger lines, that you are working with that advantage, and it's going to define whether or not you've reached areas that can be detrimental to your success. Disadvantageous is a great word. And guys, rules 1 and 2 for the high probability trend trade are large chart scenarios, and if you don't have them met, there's no reason to even go to that smaller, faster chart, guys. But if they are in play, if you do have momentum, if that path is clear, you're going to turn your attention to a smaller, faster chart, guys. The large chart's a broad stroke of a brush. You're kind of painting your living room walls. The small chart is getting around the light sockets. And this is going to refine that 1 bar and literally show you an X-ray, 20 to 30 bars of action on that smaller, faster chart. And you're going to use that to pinpoint that continuation. You're going to use that because it's going to allow you to reduce risk and it's going to allow you to increase your profit potential. But guys, on this large chart, you don't see change fast. And the advantage of momentum, the advantage of a clear path is very rarely going to change while you define your entry. And it's pretty outstanding just how accurate you can be. And I use these 2 charts. Nexgen put together these 2 charts. Specifically, my brother began to teach this on only 2 charts because it's a reflection of who you're trading with or who you're trading against. We all like to think we are the alpha male and female and the big dogs and the tough kid on the block, guys. Your position, whether it's 2 contracts or 25 contracts, means absolutely nothing to the market. It has 0 influence on the market. It's not going to reverse it. It's not going to go up because you bought 2 contracts, guys. So the easiest thing to do is just trade with the large crowd, because the large crowd has the money to create trends, and the big crowd has the money to establish momentum. And the big crowd is the same crowd that reacts to those key Fibonacci areas. And man, the big crowd is the world's greatest lazy river with a pina colada every 20 feet. And all you have to do is hop in and go with it. But there is a small crowd. And the small crowd still has 100 times the influence than you will ever have in the market. And they create fights, and they create what we call retracements, just tiny little pullbacks that are counter to everything that the large crowd wants. And the small crowd, whether it's by design or unintentionally, they fail typically 70 to 80% of the time in their pushes against the overall trend and momentum. And you're going to be able to pinpoint using this refinement chart precisely where their failure is most likely to happen. And that actually is the place where the market is most likely to continue with that trend. So for decades now, there has been a path to get to where you want to be as quick as possible. There has been a path to get you into chart reading, to get you understanding concepts, to getting you to where you can recognize this trade and capitalize off of it as soon as possible, guys. And it starts with posting your trades in the room. And that's one of the things, is this is a discussion room. This is not a lecture room. You're not watching a seminar, guys. You are the seminar. And your great questions from the pictures that you post in the room, guys, this is what makes this class amazing. Because everybody makes mistakes. I make mistakes. I posted one in the room earlier. I'm waiting for someone to chastise me for it. And you will. You'll make mistakes throughout the day. But the great thing is every time you post in the room, guys, it's a private session with me. And we're going to talk about what you did right. And we're going to talk about what you did wrong. And if there is something that appears to be wrong, we're going to come up with a plan together. And I'm going to give you some direction to fix that challenge so that you don't face it again. We're going to spend the morning. Boom. Thank you, Steve. We're going to learn the trigger line and the Fibonacci rules for when it's okay to trade. Two options is going to take a lot of stress out of your life. Either your rules are met or they're not. Only one of them puts you in the market, guys. Commit to that from day one. You guys can simulate. That's the beauty of what we do here. There is no risk of financial loss. Get in and practice, guys. Practice. Break rules on accident. Break rules on purpose. Maybe when you're a little more advanced. But the goal is that you have this path towards always trading the correct rules, because the correct rules, your trading plan is going to be based off of a pattern that has been tested, verified, validated, and proven to win more than it loses. So your goal is to really focus on the execution of these rules, because you know if you take 10 of them, you're likely to win 7 or 8 of them. We're going to simplify a lot. We're going to talk about this highest probability trend trade. We're going to focus on it extensively. We're going to take each of the 3 rules and I'm going to break them down individually. We're going to talk about what they look like, what they mean to you, where to find them. But you've got to learn these looks. You've got to tell yourself from day one, all right, I got to do some study. I've got to learn these looks. I've got to know what it's going to look like. And once I know what it looks like through pictures, once I know what it looks like through study, it becomes pretty easy to find in the live market. And this is where the second half of getting to where you want to be ASAP comes in, guys. This is the spreadsheet. And I give it every day, and I'm going to give it again today. And I'll give it to you tomorrow, and I might even give it to you later in the day. But this spreadsheet has 5 tabs. The first tab is just your trade journal. And if you've ever gone to the CME website, if you woke up one day and you're like, I'm going to be a day trader, let me go to the CME and see what they say. The first thing that they tell you is have a trade journal so that you can track your progress, so that you can study what you're doing and learn how to do it better. And that's exactly what this first page is. And your job with this page is to come back every morning and study it. Every morning you need to ask yourself, what did I do yesterday that worked? What was I doing yesterday that didn't work? What were the trades that felt easy? What kept me super relaxed? And man, what felt forced and made me nervous? In this little study each and every morning, it's going to set you up for the day, and it is going to accelerate the learning. There's links on how to paste your pictures into that trade journal so that you can use a hyperlink rather than these big ugly screencast links. But even more importantly, guys, there's a way to annotate your charts that's going to get you where you want to be the fastest. And it's going to just be referencing those three advantages: momentum, path, and entry area. And if you do this every time you take a picture, you'll never ask me in 30 days, hey Mark, was this a good trade? Hey Mark, was this the correct entry? What you'll say is, hey Mark, guess what? This is the rules being met, because here's the picture of it, and here's what it means to have it met, and the picture matches what it means. And what'll happen is you'll begin to associate these words with these looks, and man, you, like wild horses, couldn't drag you into a trade without these advantages once you trust them a little bit, once you get to the point to where you can see them and you're comfortable with them. So you're going to have to learn the individual rules. That's in green here. And I've given you, gosh, on this page, I would say we're probably 54, another 80, 130. We're probably about 160 pictures on this page alone of rules being met, what it looks like individually to have strong triggers, a clear path, and an entry area. And then there's also an awful lot of pictures of what it means to not have your rules met. And guys, I love it when you take pictures when your rules aren't met instead of taking trades. And you're like, gosh, I want to be in the market, but that darn termination condition is in my way. Oh, I feel like it's a long, but I just don't have the momentum to support it. Take those pictures, annotate those charts. You're training your brain that it's okay to do nothing. And you're going to want to study, and I'm going to give you everything you need to study that. Then there's the client trades. And this is nearly 400 pictures of the brilliance that is Nexgen users here in the green section. This is all of you taking the perfect patterns. This is you guys embracing momentum and clear path. This is from my class over the last couple years of people doing outstanding things with this software. So outstanding that we've created a little study guide that you guys can go through and look and start to check out and recognize these patterns. There is the entry sequence for both high probability trend trades long and short. There is a super mechanical management beginner plan, because the way we teach this trade, guys, is very mechanical. If my rule is met, then I look for the next. Your management's going to be just as mechanical in the beginning. If the market does this, then I'll do this with my stops. And then you'll grow. And there's a whole orange section on when you can hold for bigger moves, maybe where your stop shouldn't go. Patterns that repeat themselves. Guys, once you're a chart reader, once you're good at recognizing these advantages, things are going to pop out to you. Trades are going to show up. Patterns are going to materialize that you didn't even know you were looking for. You're going to want to take pictures of those, guys. So the final tab here, this is your section that looks like the one that I filled out for you, guys. This is your personal trade setups. Every time you see that pattern, and it's, you know, specifically the high probability trend trade pattern in the beginning, load it up here so you know what it looks like. As you begin to expand your management plan, guys, take pictures of everything. Get out of the habit of only taking pictures of your entries, guys. Every trade that I take a picture before I enter. I take a picture when I enter. I probably take 5 or 6 pictures during the trade to make sure I'm not missing something on management. And then I take a picture after I exit to where I exited. And then I'll usually go back and look at the market and see if there was a way to manage it better. Maybe my exit didn't make sense. Maybe it was too soon. Maybe it was too late. Guys, the more pictures you take and annotate, the quicker you're going to get to where you want to be. So that spreadsheet was given to you. And this is what we're going to do today. This is my first hour every day, guys. It's the same hour. I am the brokenest record that you have ever met. We're going to learn the rules, break them down individually, how to study them, where to put them as you study them, what they mean to you. You guys simulate, practice, post in this room, guys. The people that post the most typically get to where they want to be the fastest. Because I'm going to tell you, my voice will get annoying in your head telling you not to trade in the termination conditions. And you're going to hear me saying, how can you take a momentum trade if you don't have momentum? And it's going to help keep you out of trouble. All I need is for you to post in the room and tell me what you saw. And we're going to simplify. We're going to talk about this highest probability trend trade, guys. That's our focus for an entire hour. And once you understand that highest probability trend trade, it's going to open the door for medium probability trades, guys. Once you can identify those 3 advantages, you'll be able to recognize when one of them is gone. And that puts you in the medium probability trade scenario, guys. And this is when most of your indicators line up for a trade. However, a small issue exists. Your chart reading is going to identify that issue. This is going to be the vast majority of your trades, guys. The high probability trend trade is probably not going to be the trade that you take the most. You're going to be seeing these medium probability trades more often than not, and you're going to have the ability to manage them based on your ability to read your indicators. So you're going to have to execute them, and they're going to have to be managed a little more assertively. And you may have to get to a zero loss level a little faster, and you may have to take profits a little quicker, guys. It's your chart reading that's going to enable you to do that. So let's get going on the rules. Please interrupt me if you don't understand something. Please go, hey, Mark, cover that again. Mark, say it a different way. Mark, go to Google Translator, put it into Spanish because I just don't get the English version. Whatever it takes for you to have clarity, guys. That's my goal each and every day. We're going to start with the large chart because the large chart leads the way, because the large crowd tells me what I should be doing, guys. And my large chart must have strong trigger lines. In order to have strong trigger lines on the large chart, I have to be going with the trend. It's the only way it works with the way these colors come to be. So if the background's green on the large chart, I'm looking for rules to be met for high probability trend trades long. This is what we call the uptrend. If the background is red, it's going down. I'm looking for rules to be met for high probability trend trade short. Guys, this is one of the easiest ways. Just go with the flow. When I have an uptrend, it's actually the small triggers breaking above the large triggers that creates that background. So the only way I'm going to have strong triggers is if my small triggers are above my large triggers, guys. My small triggers need to be green, just like the background. My large triggers need to be green, just like the background. And then the space created, that break above, that gap, I want you to picture scissors that just open, getting ready to cut. It's the space between small and large that lets me know that the odds are favorable for the market to continue up. And it's the exact same look, other direction, guys. When the smalls break below the large, it paints the background green. When the smalls are below the large in red, when the large are red and they're wide and they're angled in the direction of the trend, guys, it's that space between the two, those open scissors. It lets me know that the odds are favorable for the market to continue down. Odds favorable momentum. You're going to hear it in the room all day long, guys. OFM. You're going to see it on charts. People are going to write that because who wants to write large chart has strong triggers? Just write OFM. The odds are favorable. This is the move that pushes the market in the direction of the trend, guys. This is the look that can break key Fibonacci areas. This is the look that even covers mistakes that we all tend to make as new users because momentum's hard to stop on that large chart. When I have it, when I have that momentum, when my path is clear, that refinement chart is where we're going to define entries. But on a large chart, you see these tails or these wicks when the rules are met. Guys, those are the pullbacks on the small chart. You're going to be able to pinpoint where that tail is most likely to form, and you're going to be able to go back and look at these tails and compare them to a small chart and study this trade. Study it, look at it, learn it, believe it. And guys, these tails are not our entries, but you're going to be able to pinpoint where they happen. And I'm telling you, this is the easiest lesson that you're ever going to get. And sometimes you just don't have momentum 90% of your day. But when you do, when the smalls are above the large, when the large are wide, when everything is angled in the direction of the trend, guys, look how that market flies. And we're going to come through and look at these because there's one of those pullbacks. And that's a pullback. Sure enough, that was a pullback. And there's another. And guys, you're going to begin to recognize these. You're going to begin to see these. So strong triggers down, separation. Strong triggers up, separation. Can you guys give me a Y in the room if you're with me? That's rule number one. And guys, I'm telling you, this is one of the easiest lessons that you're ever going to get. Love it. And guys, I don't like to trade without momentum. It certainly doesn't feel right. Hello, what's it look like when the momentum goes away? I almost missed that. I had a third cup of coffee this morning, guys. I apologize. I'm a little wound up. When your scissors close. When the small triggers return to the large triggers, work their way inside, guys. This is what we call a weakening of the large triggers. This is a visual that the momentum is slowing in the trend, guys. And when I have weak triggers, anything can happen up or down. I'm a big language fan. Odds favorable for the market to continue down. Anything can happen up or down. Strong, weak. I'm telling you, word association, anchor words to the looks, guys. It's going to pay huge dividends long term. So let's go see if we can find some weak triggers. Well, there was weak triggers right at a fib, and sure enough, there's a reversal. They're returning, and we get a little bit of a pushback. Smalls inside, and there's a big retracement. Smalls inside, and there's an untradeable retracement. Smalls on the wrong side, and it goes up. Guys, go back and take pictures. Understand when those advantages are there. So I'm going to ask real quick. The smalls are breaking above the large are wide. What do you guys think? Can you see how this is the beginning of odds favorable momentum? But this is only one advantage. That's what it looks like at the very beginning of odds favorable momentum, guys. Doesn't mean that there's a trade, but what it does mean is that there may be the onset of momentum. Let's look at another one. Bum, bum, bum. I think that was the S&P, wasn't it? Yep. So this is crude oil. So in crude oil, let's take a look. Can you give me a Y, guys? Smalls above the larger wide, angled in the direction of the trend. That is odds favorable momentum in the moment. Exactly what it's going to look like when you're thinking about taking trades. But these damn lines get in the way a lot, guys. And that's what's going to take us to rule number 2. Once I have odds favorable momentum, once that market is likely to continue in the direction of the trend, guys, I have to make sure that there's nothing in my way. I have to make sure that there's no termination conditions. Termination conditions are those likely to stop the market areas, guys. And termination conditions are Fibonacci-based indicators that have the potential to reverse the market, that have the potential to stop the market, to create untradeable bounces. These termination conditions are where the large crowd makes decisions. Whether it's to enter or exit, or whether the two sides fight one another, buyers and sellers, guys, you know about these lines before you ever get to them. And you're going to use your T3 trigger lines, and with a little comparison between the area and those trigger lines, you're going to know if it has the potential to stop the market, you're going to know if it has the potential to break, and you're going to know if that area has been broken and if the path is now clear. So areas on the large chart are really just horizontal lines. There's divergence highs and divergence lows, guys. Magenta from a high, cyan from a low. What divergence means is that the market went up, creates a pivot, and goes down. 2.5 bars deep into the down move, your software finishes running a calculation. And if momentum indicators say momentum did not follow price, you're going to see this line, guys. And this line becomes a line in the sand the next time the buyers push up. And if the market goes down and then back up and there was a loss of momentum, you're going to see this cyan line. And this cyan line becomes a line in the sand should the sellers try to push back down. You're going to use red Fibonacci resistance, and this is an area when the market's trending up, where the market may stop, may bounce, may reverse completely, and you're going to use Fibonacci support, the blue line. And the same is true the opposite direction. This is where the market may stop, may bounce, or reverse completely. And then we have yellow 1-to-1s, and yellow 1-to-1s are like fibs that print in the moment, guys. When the market's trending up, they behave as resistance. When the market's trending down, they may behave as support. So you don't have to know what creates a fib. You don't have to know how divergence is calculated behind the scenes. You don't even have to know what the equation is to create those yellow 1-to-1s. What you have to know is that decisions are made at these key areas. So to identify termination conditions, we're going to let price reach the area, whether it's resistance or support. We're going to let the price bars get to that area because that's what's going to set off the decision-making process. And the recipe is simple, guys. When price reaches resistance, ask yourself, where are my triggers? If your triggers are below resistance, small and large remain below resistance, guys, this is a termination condition. Rule number 2 is not met. This may reverse the market. It may create an untradeable bounce. There may be a fight there that lasts for the next 3 hours. You'll never know what the reaction is going to be, but what you can take to the bank is that if price reaches the area and the triggers are below, more often than not, it is going to impede forward progress, and there's a really good chance that you're going to lose some money if you try to trade into that area. If this no triggers through termination condition is capable of reversing the market, if the decisions made at resistance were so impactful by the sellers that they turn these large triggers, that they set you up for a trade, guys, we're going to call this a strong top. And a strong top isn't mandatory to take a high probability trend trade, but when you have one prior, guys, just setting you up for the best of the best. And this strong top is going to be the precursor for the highest probability trend trade that you can take. And then the market goes down, the momentum is strong, it starts to slow, and we reach Fibonacci support. Decisions are being made when price reaches this area. So I have to ask myself, where are those trigger lines? If my trigger lines are above support, smalls and large remain above support, guys, support may stop the market. Support may create an untradeable bounce. Support may reverse the market completely, forming that strong bottom. I will never know what it's going to be. You will never know what it's going to be. But rule number 2 says absolutely no trades into the area. Your path isn't clear. Is everybody cool with that? If price reaches, look at that, a divergence low and the triggers don't break, sure enough, giant reversal. Price reached Fibonacci resistance, sure enough, triggers didn't break. Giant reversal. Man, there's 2. Support, damn near to the tick. Support again creates a giant untradeable bounce. The triggers didn't break. And look at this. Once my trigger lines got below those 1-to-1s, well, those 1-to-1s turned into resistance. And guys, that's what happens when you break an area. Areas break all the time. Your trigger lines will let you know that it's broken. When the small and large triggers get below resistance, resistance now behaves as support. That path is clear until you reach the next area. When the small and large break above support, or resistance, forgive me, resistance behaves as support. That path is clear until you reach the next area. So all of you brand new users, you either have a termination condition, which says, hey, pump the brakes, let's wait and see what happens, or you have a clear path. Small and large get to the other side of that problem spot, and it's time to look for those rules to be met for high probability trend trades. And this was such a beautiful example. Small and large get below support. Support behaves as resistance. You can see the little snapback right there. Into support creates a big ugly bounce. Everything gets below the 1-to-1s, and look how price pulls back to those 1-to-1s almost exactly. Guys, we're recognizing patterns that create advantages, and once that resistance holds, it takes it all the way to support where the market bounces, and it goes all the way up to resistance where the market reverses, and all the way back to that line in the sand from the loss of momentum, and that's what started the uptrend. And guys, this termination created a reversal. That's a strong bottom, which meant that the likelihood of this thing going up was there. Pretty awesome, right? And now we're directly into resistance with weak triggers, and we have to sit on our hands and wait and see what happens. So you either have a termination or a clear path as the brand new user, but this is going to open doors for your first medium probability trade, because momentum can break areas, guys, and your trigger lines are going to show you the potential of that area to break. When your small triggers break through an area with odds favorable momentum, with the best of the best momentum, but your large triggers are lagging behind because they're kind of the slower trigger. They don't make it through as quick. Guys, this is what we call the 50-50 trade. 50% of my triggers are through, 50% are not. 50-50 has nothing to do with momentum. 50-50 has nothing to do with your chances of winning. 50-50 is nothing more than you vocalizing where your triggers are. 50% are through and 50% are not. This fib has the potential to break because of that momentum, guys. And if you take an entry based on that potential, you do not have a clear path. That's your issue, which means that you may have to manage aggressively. It means that you may have to get to a zero loss. You may have to get out of problem areas. And what you'll find, guys, is these 50-50 trades, while they're the most common trade, They're also the most lost trade among my new users. So I am going to hand you a plan that will optimize your chances of success as you take these trades. But understand that this is nothing more than potential, guys. And that potential doesn't always come through. Let's see if we can find an example. Resistance had the potential to break, but it did not. Support had the potential to break, but it did not. This divergence high had the potential to break. Guys, these one-to-ones had the potential to break. Do you see how that works? Potential is just that. It's potential. The potential was there for this to absolutely smash, but it didn't, and it retraced all the way back to support before it finally made that move. So guys, know the difference between the three, and it's going to pay huge dividends. And can we get like a little amen or a hallelujah? Weak triggers right at a fib. Look at that retracement. Holy smokes. Thank goodness each and every person in this room knew about that fib since 4:31 in the morning. At 4:31 in the morning, this fib formed, and it came into play at 9:34. 5 hours later, that Fibonacci area kept you out of a losing trade. Thanks, Nexgen. How we doing? You guys following so far? We doing okay? Is it fun? Are you calling your wife going, oh my gosh, this guy's amazing. I'm learning so much. I can't wait to do this again tomorrow. I hope so. That's my goal. Aha, Z-Robot. Guys, there's going to be times when your path isn't clear because the areas are stacked. There's going to be times when you are chomping at the bit because you see that momentum, but those darn Fibonacci support lines are just one after the other, or those resistance lines are one after the other. And I'm telling you, this is 90% of your day. 90% of your day is sitting on your hands waiting, guys. 90% of your day is doing absolutely nothing, and it's okay to do nothing. The futures markets collectively trade $220 billion an hour on average. An hour on average. Trillions of dollars a day are exchanged, guys. You want to be on the good side of that exchange. You don't have to be in every move, right? You don't have to be in at the top. You don't have to be the first one in at the bottom. You don't have to be the last guy out, or girl, forgive me. Guys, all you have to do is wait for that momentum and clear path and find your way to get paid incrementally in between these key areas. And then when you get to them, sit on your hands, pause, wait. Let's see what happens. Because the large crowd's going to come back with those advantages eventually. Maybe it's a great opportunity to go get rid of some of that coffee. Go toast a bagel, guys. Rule number 2 in Fibonacci is going to give you the ability to see where the driving forces are most likely to make decisions. And very often, rule number 2 is going to keep you out of chop, and it's going to keep you out of consolidation. And all of the experienced traders that come to me to this classroom, they tell me that that's one of the greatest advantages that Nexgen gives them, is now they're not getting caught in these areas of consolidation because they can visually see exactly where those decisions are being made. 90% of your day is doing nothing. 10% is taking trades, guys. But I'm telling you right now, if I have momentum, if I have a clear path, you better believe I'm going to go to that small chart and I'm going to look for an entry. I'm going to pinpoint precisely where the market is most likely to continue, guys, and I can't wait to take the trade with these advantages. But if I get to that small chart and look for an entry, guys, and I see 3 divergences in the same price range, 3 losses of momentum in the same price range, guys, this may terminate the trend. This is the only time, and I'm going to say that really loud, this is the only look that will keep me out of a high probability trend trade if I have momentum and a clear path, guys. It takes 3 divergences to ruin my good time. Whether it's 3 cyan from a low or 3 magenta from a high. Guys, this may terminate the trend. This is a termination condition. This is the small chart showing you change that you can't quite see on the large chart. Becomes really powerful when I've got weak triggers, when the smalls are inside of the large, guys. We learned that one from rule number 1. And it becomes even more powerful still if it creates a little head and shoulders. If my third pivot is higher than the previous or lower than the previous from a high, because this tells me not only can the sellers not push down to where they pushed before, but they just lost momentum for the third time, guys, and that makes it just a little more impactful. If it happens, I'll hold off. I'll wait for my smalls and large to get below those divergences, and then I'll look for rules to be met. But if it's not there, guys, I'm going to use a limit order to buy or sell a pullback at an area inside of triggers. That's a mouthful. I'm going to use a limit order, which means I'm going to wait for the market to come to me. That's that small crowd push, guys. I'm going to buy or sell a pullback, that little retracement, counter to everything that the large chart says. And I'm going to do it at areas, at fibs, at mid bands, and 1-to-1s, because I want that market to bounce off of something. But here's the key. And guys, this is the golden goose. This is the one that has so many great implications. I want those areas to be inside of triggers. On my small chart, the best trigger look that you could ever hope for is what I call favorable large triggers. Favorable large triggers are going to be wide. They're going to be in the direction of the trade. And guys, favorable large triggers means that your large triggers and your synthetic triggers are overlapping one on top of each other. Large triggers are native to the 5-1. Same triggers you're going to use, that separation to determine momentum. The synthetic triggers, these step triggers, guys, these triggers are just the large chart large triggers. We put them on the small chart because one of the gospel truths of the way the market moves and the math that goes into moving averages is that price returns to large triggers over and over, all day long. So on my small chart, I'm looking for those price bars to return to the large triggers. And on the large chart, I'm looking for those price bars to return to the large triggers. Guys, they're the same prices from the same market. So with large and synthetic, on one chart, I can determine exactly where the market is likely to return. Guys, this is the correction point. Price breaks away, and it's likely to return to the large triggers. This is where the market's most likely to correct. The market's most likely to bounce at areas inside of favorable large triggers. So my small chart might retrace back to the large triggers, and I've got 1-to-1s and a fib in there. Those are the areas that I anticipate creating a bounce. Price may return to the synthetic triggers. I've got a mid band in there. That area also can create a bounce, guys. So you're going to learn how to create this window of opportunity, this zone, where the market is most likely to continue and where the small crowd is most likely to fail. And everything begins with the advantages of the large chart. Everything begins with odds favorable momentum. Guys, everything begins with having that clear path. And when you are convinced that you're never going to get a trade because the market's going without you, when you are just chomping at the bit, the small crowd typically shows up and fights, guys. And that's a reversal bar. And this reversal bar, that red bar after all of these green bars, notice that it's right of the triggers. This is a loss of momentum. And that loss of momentum is precisely what we need to get back to our entry. So this reversal bar signals the beginning of the pullback, signals the beginning of the fight. This reversal bar is not your entry. My wife jumped in on the reversal bar over and over and over and got stopped out on the way to the trade. And then we fixed her. Don't tell her I said that. Guys, once I get the reversal bar, I'm going to find those favorable large triggers. I'm going to look for the large triggers and the synthetic triggers, and I'm going to say to myself out loud, scaring cats and dogs, from the top of these triggers to the bottom of these triggers is where price may return. But I understand that trigger lines are not entry points. So I look for the areas, fibs, midbands, and yellow 1-to-1s that are inside of those trigger lines. And guys, that word inside is all caps for a very important reason. We're giving ourselves a key advantage. And by having areas inside of the triggers, either of these may create a bounce in the direction of the trend. Either of these may create a bounce with all that momentum, with that clear path. But I don't know for sure which one it's going to be. I'm not a mind reader, right? I don't have a magic 8-ball. Well, I do, but I don't use it. So we create a window. There's a range. There's a point where the market is most likely to continue. That's what the blue shaded area is, guys. This is you taking all of that price action and learning how to whittle it down into the point where the market is most likely to continue. Guys, your large chart is screaming to the upside. Your large chart should have absolutely nothing in the way. Look at that. This is the look. Remember those tails that I talked about? Those tails typically form right at areas inside of favorable large triggers. But because your large chart is so strong, your limit order, your entry order, goes a tick or two above the highest point of support for a long trade. Because we're not going to trip over a couple pennies hoping to save a few dollars and putting an entry below an area that may create a bounce. And even more so, your entry does not belong at an area outside of those triggers. Guys, once I get below these triggers, once I have blown through the first bounce point, the second bounce point, and the lowest point where I expect price to return, guys, this is where the market shouldn't go. I don't want to be in a trade here. My advantage is gone. My edge is missing, guys. Any line outside of the triggers is not a part of the window. So in a downtrend, the momentum is down. The path is clear. It's time to look for an entry. So I wait for the reversal bar. And this reversal bar signals the beginning of a pullback. This reversal bar prints on the wrong side of the triggers, showing me a loss of momentum. Thank goodness I need that loss of momentum to get me back to areas inside of favorable large triggers. Triggers are where the market may return. I don't want to get in at the triggers. I want to get in at the area inside that may create a bounce. So your limit order goes 2 ticks below that midband, that lowest point of resistance inside of favorable large triggers. Guys, that's your high probability trend trade. That's the best of the best. Any line on the wrong side of the triggers, above the triggers for a short trade, guys, this is where your advantage is gone. This is where your edge is missing, guys. And anything beyond those triggers is where the market should not go. This is not a part of your window. And if you take 20 days, and you say, you know what, I got 20 days, that's not much in my life. To identify momentum, to get good at it, to commit to it. If you take 20 days to understand termination conditions and commit to not trade into them, and then if you take 20 days being able to pinpoint that entry area for the highest probability trend trade, guys, not only do you know where the market is most likely to continue, but you know precisely where the market should not go if this is going to be part of your 70 to 80%. And guys, this is management. This is where your initial stop placement is. 4 to 5 ticks beyond those trigger lines. 4 to 5 ticks beyond the correction point, guys. This is it. That's where your edge is gone. That's where advantage is gone. That's where logic says, I don't want to be in this trade anymore because everything's not going my way. And guys, anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30% of the time. Your stops will get hit. You will lose trades. You will lose the perfect trades. Not because you did anything wrong, but because, guys, not every trade's going to win. And I'm so sold on the idea that this pattern belongs in my plan that, guys, even in the spreadsheet that I put together for you to study, when you have odds favorable momentum, when you have a clear path, when you enter the area inside of favorable large triggers, there will be times when the small crowd pushes past and stops you right out of a trade, guys. You have to learn to be okay with that. This is what we call acceptable losses. Unacceptable losses are when you bypass the advantages for the trade, when you break your rules, guys. Those are what we call avoidable losses. So, first stop goes where the market shouldn't go. But if all those advantages produce a confirmation bar, if they give you a reversal bar in the direction of your trade, you can reduce risk 2 ticks above or 2 ticks below those reversal bars. And it's not at all uncommon to see you guys take the perfect trade to get that reversal bar, to minimize your risk, and maybe the small crowd just pushes down and gets you guys, and you lose 30 or 40 bucks a contract instead of that clinging to hope and fear, giving up 200 to 300 when it already told you that it was headed that way and then it decided it wasn't going to work. You're not in control of the market, guys, but you can mitigate risk. You can be in control of the risk that you have by taking great entries, by having a plan that has you exiting when the advantage isn't there. And guys, that's my first hour. That is the best of the best. That's the highest probability trend trade. That's utilizing momentum, and that's utilizing pullbacks to areas inside of favorable large triggers, guys. And you can go through and you can circle a tail now and then. And that one probably had the potential to break. And this one over here looks like it may have given the potential to break. So let's just see what that circle looks like on a smaller, faster chart, because you're going to want to go back and study this. And it did, in fact, pull right back to a mid-band right inside of a trigger. But those aren't favorable. Those aren't one on top of each other. And that was only the potential to break. And ultimately, it didn't. So guys, you're going to use these areas inside of triggers. And when they're favorable, it's going to be the best of the best. Chances are they're not always going to be favorable. Chances are they're going to be split or divided a little bit, guys. This is the easiest look, the best look. This is the one that I never, ever, ever even think about hesitating on. But that's not always the look. Very often, you're going to get split triggers. You're going to have large and synthetic away from one another, and you're going to have to say to yourself, because you paid attention in class, price may return to the large triggers, but it also may return to the synthetic triggers. And that's a huge gap, and I don't really care for that. And you're going to say things like, I know that it's the areas inside of triggers that are most likely to create a bounce, but my areas are so far from one another. My triggers have so much distance between the two of them, but I know that my stop goes 4 to 5 ticks below the triggers. And the mid-band is entirely too much risk for me. So guys, this is where you can use the idea when your entry isn't perfect. You can use the idea of that confirmation bar, of that reversal bar in the direction of your trend, in the direction of your momentum, in the direction of your clear path. And you can say to yourself, I've got choices and indecision. This isn't perfect. That's way too much risk. But if the market moves in the direction of my trade, I can put my stop 2 ticks below it. I can take that confirmation bar. It establishes my risk. And it doesn't assure a winner, but what it does is it says I take a tiny little loser if it decides to run all the way back to the lower area. And if it does, I may have to take the trade a second time. That's okay. I will take the correct trade twice. But this kind of makes sure that I don't miss it if they go from the high one, guys. So go back and learn these looks. Study these trades. And this is a great example of how when the large chart says up, when the large chart has momentum, when the path is clear, guys, the large chart's going to be all the way up here at 97.05. This is where decisions are being made, because that's where the reversal bar prints. And guys, that top of the bar is only 8 ticks from trouble. And a lot of you are going to say to yourself, that's not enough room to make any money. 8 ticks, that could be a termination condition. Yeah, but it takes price reaching that area for it to be a termination condition. Ladies and gentlemen, that's a target. With all that momentum and a clear path, this is where I want the market to go. And here's the really cool thing about what we do, is that if you wait for the pullback to the area inside of favorable large triggers, your entry's way down here. Your profit potential is huge. Great entries create manageable trades. Go back and study these. Go back historically. You've got 10 days on every market you have a workspace for. Go back and study this pattern. Make it easy, guys, because all we do is trade patterns. That's all it is. The market has a memory, and we've cracked the code, guys. So now you've just got to commit this stuff to memory so you can do it. Here's the easiest way. I told you I'm going to give you everything that you need to be successful with the software, guys. This, in my opinion, is the most important thing that you can do as a brand new user. This is the most important thing you can do if you find yourself breaking rules often. This is the most important thing you can do. And it has nothing to do with taking a trade. It has everything to do with taking a picture. So to get to where you want to be, you've got to be able to recognize momentum, strong triggers, weak triggers, clear path, termination conditions. Guys, go start snapping pictures like you are a new parent at Disneyland with a toddler. Take as many pictures as you can. Don't stop at 25, but make 25 the goal so you get the work done. And guys, don't just take pictures of these rules being met. Go back and annotate. Why are the rules met? Why is it odds favorable momentum? And check this out. If I click on this strong trigger look, what's it look like? It says, Ys. Tell me what you see. Smalls are above the large, Rule 1, strong triggers, momentum. Type out, make it visual. Connect words with looks, guys. And what happens is if you do this 25 times, it becomes very difficult to ever trade with weak triggers unless you've made the decision to trade with weak triggers. And it makes it very difficult to trade into termination conditions unless you've made the decision to trade into termination conditions. So connect the looks with the words, guys, with the advantages. As you do that as the brand new user, it would be silly to expect you to know what everything looks like after day one, right? So I'm giving you the high probability trend trade checklist as well, guys. And this has pictures of what it means to have a strong top or bottom. This has pictures of momentum, of weakness, of terminations, of clear paths, and even of that potential to break. And this actually goes down and shows you exactly where your limit order goes and where the market shouldn't go. And then the second page is a checklist for you to follow the rules for the highest probability trend trade, guys. Remember that a strong top or bottom isn't mandatory, but it does create a little bit of an edge. But I've never had anybody check yes to all of these. Never had anybody check yes to all of these and do worse than 70%. Typically it's closer to 85, but you know what? Let's project low and be excited when it works out better than that. Guys, you can print this out. You can put it on your desktop. You can follow these rules as you learn to read indicators, guys. And I'm going to give you a plan that uses these rules as you learn to read your indicators. Guys, this is the KISS plan. And the KISS plan is a stepping stone in your learning journey. The KISS plan puts you into your first trade, guys, not your only trade. The KISS plan is designed to optimize your chances of success with the high probability trend trade. And ultimately on this KISS plan is a plan to optimize your chances of success with that 50-50 trade. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. That was AI generated. My brother had a moment where he loved AI. Guys, once you can read your indicators, you're going to see opportunities. One of the gentlemen in this room says, the high probability trend trade is not your get-rich trade. The high probability trend trade is what's going to open your eyes to your get-rich trade, guys. Once you understand momentum and clear path, you're there. You will find your entry. The high probability trend trade gives you the ability to be consistent and profitable while you look for your entry, guys. So your simple plan for consistency is never fight the large chart. Guys, never fight the large crowd. If the large crowd says up, go up with them. If the large crowd reaches a termination condition, don't try to break through it. Force them to break through it, guys. Don't fight the large chart. And then define your entry. Great entries create manageable trades. You have the greatest entry that I teach in this plan, guys. Here's each rule. The little bonus there, right? Not mandatory. And exactly what it looks like once again as you study this plan. And your entry is mechanical. Your entry is methodical. Your entry is very pragmatic, guys. Every time you look at the market, you should be saying out loud, do I have strong triggers? Is there a termination condition? Do I have an area inside of favorable large triggers? And I'm telling you right now, if you vocalize out loud that you have these advantages, you're going to take that trade because your brain believes you. Your brain believes you that this is the best of the best. And once you have your entry, guys, it's terrifying for most of you. You have to manage it. This is where that nasty little what if monster comes in, sits on your shoulder. But what if it turns against you, Morgan? Shouldn't you jump out? But Jay, what if it turns around and goes the other direction despite the momentum? Shouldn't you move your stops? Shouldn't you decrease your targets? Or maybe that little what if monster says, what if it's the one that runs forever? Shouldn't you just hope that it breaks through all these key Fibonacci areas? Guys, every bit of that is going to enter your brain as you learn to manage trades. So let your management be just as mechanical as your entries in the beginning. Learn how to trust and read your indicators. And then you will craft a management plan tailored to your personal goals based on your experience reading the indicators. Guys, when you can read your indicators, you're going to see things. But your entry should be 100% where the market is most likely to continue. Guys, your management plan is dependent on your ability to pinpoint entries. So focus on those entries. Focus on the process before you focus on the money. And once you get in at this mid band, right inside of those triggers, ladies and gentlemen, your stop is 4 to 5 ticks below the lowest point of those triggers. And there is nothing for you to do. You're either going to get stopped out or it's going to give you a reversal bar, guys. Those are your two options. There is no, oh shit, I'm scared. Let me move my stop. Oh no, I hope it doesn't go below the mid band. I'll just put it right below it and see what happens, guys. You either get a reversal bar or you get stopped out. When you're on simulator, accept that, learn that, embrace that. You will not win every trade. But with all those advantages, guys, you're more likely to get a reversal bar than you are to get stopped out. And once you get the reversal bar, your first stop movement is 2 ticks below that reversal bar. And then once again, you're powerless. You're either going to get stopped out of this trade for a smaller loss that doesn't sting, it's a normal part of a positive equity curve, or it's going to go to your first target. Yay! And that first target is only $100 away from your entry. Guys, this very, very mechanical management plan is not only designed to keep your emotions out of management initially, it's also designed to get you paid ASAFP, because that payment creates confidence. That payment creates trust. That payment dries up sweaty palms and the butterflies from your stomach go away. And guys, you're going to move your stop to break even. And you're going to move your stop to break even, and you're either going to get stopped out for 0 loss on that second contract, or it's going to go to your second target. And guys, break even may not be the best of the best. But the only reason we do it is so that you have the courage to remember that the only reason you took this trade was because of odds favorable momentum and a clear path. And this is a market that's more likely to continue in the direction of the trend. And this is a market that has nothing in the way to create a bounce. And this is a market that is an absolute freight train heading north, guys. And if it hits your second target, instead of that break even, that's a $300 trade. That's a $300 winner, guys. And look at this, that little fluctuation. If you panicked and moved your stops and thought that, oh, I'm going to be clever and put it halfway between my target and my entry, they got you, and then they ran and they flipped you off on the way. Guys, small chart has fluctuations. Follow this plan and keep it really mechanical in the beginning. Learn how to trust your large chart. And what you'll find is that making $300 a day, even if it's 3 break-even trades, is really pretty effortless when you start embracing these advantages and following your plan. Making 500 is not unreasonable. Making 1,000 is actually very doable. But learn how to get paid first. Learn how to make a little, and you'll find a way to make more, guys. One high probability trend trade that goes the distance is a $75,000 year. When you start making $200 a contract, you're in 6 figures, guys, and it just goes up exponentially from there, because you're going to add more contracts and you're going to learn how to hold for bigger moves. But in the beginning, stop trying to be a freaking rock star. Learn how to enter and learn how to manage, and guys, everything else will fall into place. And that takes me to the final thing that I'm going to talk about. Before you enter the market, guys, before you go live, before you get off of that simulator, you've practiced your plan, you feel good about it, it's time to, man, I'm going to go buy a boat with the money that I make. Guys, there's 2 things that you have to know without question before you begin your journey as a live trader. You have to know why you will enter a trade. You have to define the advantages and accept them and follow them and focus on your execution. And guys, you have to define your exits. You have to know why you'll exit a trade. Your entry patterns, guys, these are the patterns that have been proven to win more than they lose. If they haven't, they have no business in your plan. If you haven't studied them and verified them, guys, you're not going to trust them. And if you don't have trust, you will change your plan mid-trade. Your exit conditions are you identifying through chart reading when your advantages are gone, if your targets aren't reached. And this is you saying, oh my gosh, I no longer have the edge. Let me exit this trade and wait for the next one. So your management is dependent on your entry, dependent on the type of trade that you're taking. Because a high probability trend trade is managed very differently than a 50-50 trade. And a 50-50 trade has different entry rules than a high probability trend trade. And a momentum trade doesn't really resemble either of them in entry or management, guys. So keep it simple and focused in the beginning. Focus on this highest probability trend trade. Give me 30 days. I think it even says that in the website. Where is that at? Maybe that's it. Your first 30 days, guys, can be focused on the highest probability trend trade. Your first 30 days can be spent learning to read indicators. Your first 30 days can be blowing up my room with every question that you can possibly think of so that you get confident, so that you feel capable, so that you trust. And guys, when I told you I was going to give you everything that you need to be successful, I just dropped a zip file in there for you labeled everything you need. We learned the rules for when it's okay to trade, guys. We went through it extensively. We just spent an hour breaking them down individually, learning how to take pictures of them, what we should write on the chart when we take the pictures of them. We even pieced those advantages together to show you exactly what it looks like to have a high probability trend trade. I gave you a spreadsheet with like 400 pictures of them. I gave you a spreadsheet with all the rules broken down. I gave you a trading plan that you can follow as the brand new user. And I'm going to tell you right now that I've had people follow this trading plan in their first 30 days with Nexgen and get funded in those prop firms that you see everybody doing. It's pretty cool when you have advantages. You have the means to study through the 101 chart reading, guys. You know exactly what it looks like and have a checklist for entry through the high probability trend trade checklist. You've got a daily goals so that you can realize that you don't have to make $1 million every trade to get rich. You've got entry and exit conditions for each type of trade that I teach, guys. And you've got the KISS plan. You've got the plan designed to optimize your chances of success with both the high probability trend trade and the medium probability trade. And this is, I think, the most impactful thing that I say every day. It's not the rules that I teach or the feedback that I give. You have everything that you need to be successful right now in your hands. The only thing that I can't give you, the only thing that Nexgen can't provide you is experience. I can't give you the repetitions you need for these things to look easy. I can't make you take the pictures so that you recognize these in the moment. I can't show you and remove that fear because you haven't built trust, right? So we'll go through. And I feel good about what I just did here, but that's not where my job ends. My job is to teach you to read your indicators. So in order for me to do my job the most efficiently, you have to post in the room. You have to show me what your chart reads are. And this is why I do it. I don't need you to annotate a chart for me to recognize momentum, a clear path, and an entry, guys. I don't need that. I'm pretty good at this stuff at this point in my life. But what I do need is for you to have an annotated chart, because you're going to want to make sure that you're reading momentum correctly. And if you don't tell me what you see, I don't know if you are. The same is true with path and entries. And your job is to go back and study these, guys. I'm not going to call you in the morning and say, hey, Morgan, I know you looked at those unannotated charts. Let me remind you what was going on them and what went well and what went wrong. I'm not going to do that. I love you guys, but I don't love you that much. So make sure that you give yourself a great study tool. And what you'll find is that it won't take long until you start nailing these entries. And it won't take long until you're really good at management. But the more you look for as a brand new user, the more trades you try to catch, the more emotional your management is. Guys, the longer it's going to take to get where you want to be. And I know this because I did it myself. I spun my wheels, guys, for a long time trying to do it my way. And the way this is set up is we're trying to make it so you can avoid a lot of the pitfalls that the crew that came before you went through, guys. And that's why you have the spreadsheet, and that's why you have the feedback, and that's why we do this class. So when I come back after break, we're going to go back to every chart posted, and we're going to talk about these three concepts. I don't care if it's a high probability trend trade, if it's a momentum trade. It doesn't matter to me if it's an HVA trade or one of those white bar trades that John Novak teaches. Every chart we will discuss momentum, clear path, and entry. Because this is an educational room and I want you guys to see it. And what you're going to see, especially you newer users or you guys that find yourselves breaking rules, is that the majority of the winners that are posted in this room have both momentum and a clear path, and the entry tends to be unique to the user. And that's where you're headed. So we're going to do that. I'm not going to chastise you if it wasn't high probability. All I'm going to do is point out advantages. And if I see an opportunity, for you to have had a lower risk entry or a less risky entry, if I see an opportunity for you to have taken profits rather than suffering retracements because of key areas, or if there was opportunity for you to hold that trade a little bit and maybe get some more out of it, that's what we're going to discuss, guys. We're going to try to be a little bit better every day. So post them if you have them. If you have questions, get them in the room. I'm going to go take 5 minutes, but let's do a live chart read. What do you say? Let's go see what the market is doing right now. My large chart in crude oil says that I have odds favorable momentum. It says that I have strength to the downside, but it also tells me that that 71.31 fib is not quite broken. Does anybody in the room get a different read than that? I have momentum to the downside, but I don't yet have a clear path. Rule number 1 is met without question. Rule number 2 is not. I have 2 losses of momentum in the same price range. And now my path is clear. And if I don't get a third divergence, guys, I've got one set of triggers here and one set of triggers here. I have 2 separate points where the market may continue. I have 1-to-1s, I have a mid band, and I have fibs. I have 3 points that may create a bounce. Ladies and gentlemen, this is where I say to myself, I'm not getting in at 15 because my stop is at 37 and $220 of risk is ridiculous. My entry isn't perfect. I choose to wait for a confirmation bar. I choose to wait for it to pull back to one of these key areas and then give me a reversal bar in the direction of the trend. Does everyone understand how we just did this read in its entirety? We started with momentum and then we looked at the path, and when the large chart said go, done. I'm going to pick my entry point based on triggers and areas. And when it is this ugly, triggers here, triggers there, areas everywhere, ladies and gentlemen, my brain says a confirmation bar is my best choice. My brain says don't just hope, force it to pull back to an area and then go in the direction of the trade. Your plan may be different, but I sure do like to talk about that. So I'll be back in 5 minutes, guys. Stretch them, walk away. Oh, crap. 3 divergences in the same price range. I'll see you in 5 minutes. Post them if you got them. Wayne, you're missing your synthetics. Reload the 13.2 dynamic Renko bar, Nexgen NASDAQ futures. You may have built a chart and accidentally done this 13.2. It's the one that's specific to the NASDAQ that'll give you the synthetics. And then if that doesn't do it, make sure that your tick data, tick replay is checked. And if it is and you do have the right template, I would rebuild the chart. That's my order of operations there. I'll be back in 5 minutes. We'll see what happens here. Did that get you taken care of? Were you able to fix that? I'm going to go up to the top of the room and we're going to start looking at the pictures that you guys have posted today. There's not a lot, so I'm going to talk a lot on all of them, I guess. We'll try and kill some time so there's not so much dead air. Joel got us started, and Joel says, check it out. Joel, this is actually a strong bottom. Are you with me in here? So guys, the recipe for a strong top or bottom is always consistent. And if I have a fib and none of the triggers break through, price pulls back, triggers don't break, and we've got a couple of them here, and it reverses the market. Large go from red to green. This is a strong bottom. And Joel, I think that you saw the divergence, the pivot here, and said, oh, divergence isn't a strong bottom. And that was a great view. But you actually have a strong bottom. And then it reverses, and everything's going up, and every chart agrees. And you really captured the first move. It wasn't the best trigger look. No sound? Oops. Here we go. Thank you, guys. All right, we good now? Cool. So guys, this is a strong bottom. I apologize for that. Because no triggers get through this fib. And it reverses the market. This is 100% a strong bottom. It's not the price bars, it's the triggers. And Joel says, I know that divergence from the middle of nowhere isn't a termination condition. And that's, I think, what you were looking at, Joel, but this is a strong bottom. And then every indicator turns and goes up. And you don't have the best momentum yet, but you do have a clear path. You do have an area right at the triggers. And this is a beautiful medium probability trade. Strong bottom sets the tone. Every indicator agrees. Support holds, and it goes all the way up to the next area. And Joel, this is an absolutely outstanding trade. And here we have all of the writing. And the one thing that I noticed right off, Joel, and the one thing that I'm going to point out is that on this trade, you pulled out your trend trade checklist. And you said that the market is coming from a strong top or bottom. Well, it's impossible for it to be a strong top or bottom because the triggers went through the area. It's impossible for it to be a strong top or bottom because the large triggers still haven't rolled. Does that lesson make sense to everybody? What we have here is actually a 50-50 trade that failed. And then when the small triggers turn, not confirmed strong top, this is just your small momentum indicator. It's still above the large triggers, and everything is still above the termination condition, guys. This is in no means a high probability trend trade. There were multiple divergences and a full roll, and what Joel says is that with this much in the small triggers, with multiple divergences, with my large triggers below synthetics, everything coming down, this creates an opportunity. It is not a high probability trend trade opportunity, and to be honest with you, these one-to-ones could have been what set the market to go right back up. Joel says, I'll take a chance, and it works out nice. Eventually the momentum catches up and the market cranks down. But guys, if you're gonna use a checklist, make sure that you're actually following it. You can't put termination conditions are not true because all the trigger lines are above resistance. You can't put area inside of favorable large triggers because one is up and one is down and they're not overlapping. And guys, I believe in honesty and annotation. And this is a lot. This is a lot of annotation. And most of it's incorrect, and I will point this out, and that's okay. After the fact, it looks like a beautiful trade, doesn't it? And guys, when we go back and look at things historically, when you go back and look at things historically, what you're going to do is you're going to try to say, this was my trade, and that's how much money I would have made. But I want you to go back to advantages. Every time you want to do that, I didn't have momentum, nor did I have a clear path or favorable large triggers. Is this really my best chance of success? And guys, hindsight makes us brilliant. I could go back to the large chart and say, guys, I knew that this area was going to hold, and my entry was right here where the triggers rolled above everything. And I didn't even get out until the one-to-ones. And it's easy to do that, isn't it? Well, I knew that it wasn't going to go up to here, so I just jumped in here and I held through 3 divergences because I knew that it would go down to the one-to-ones. You don't know that. Guys, take your best of the best. Take your highest probability. Take those trades that offer the highest chance of success. You don't have to be in every move. And you will convince yourself that that big move was your move if you're looking at it historically. So make sure the rules are met when you do that. May create strong bottom, or it may break completely, right? May create strong bottom, or it may break. Or it may dance. Hell, I don't know. Third lower divergence, general area, no more shorts. Fibs may hold, or they may not, right? I don't have an area inside of triggers. I've got multiple divergences. I've got weak triggers. We've talked about everything but the rules here. I hope that makes sense to you guys. We've talked about everything but the rules for the trade. We've analyzed everything except whether or not I had momentum, a clear path, and an entry. We've done a lot of predicting and very little in the moment reading. Guys, avoid that temptation. Keep it simple, new users. Joel, you are an awesome chart reader. But at 3 o'clock in the morning, I think you were trying to predict a little bit. All right, Ron comes in and Ron says, try to gap theory, dumb thing turned into a trend trade. Everything says down with momentum, and when it hit the mid-band, the large triggers were a full bar away. And Ron said, I'm going to try to go long and close the gap to those triggers, and it just didn't work. And when it failed, he didn't hope and hold. He said, holy crap, that's a trend trade. Let me go with the trend now. And took a base hit. Ron, that's some heads-up trading. Was that a simulator trade for you? That looks like a Ron on sim trade. You're usually a little more calculated than that. I love the way you did it, though. And guys, I want to remind you, if you have any questions about any chart that's being posted in here, please feel free to ask. You got brave on that one, right on. Bravery comes through experience, doesn't it? Guys, feel free to ask if you have questions about anybody's charts. It's okay. Don't be the trade police. Don't tell me that they broke rules, but go, man, what were they doing here? Why did they do that? What's going on, Mark? Get into that one a little further. I'm happy to. All right, Pete says, took this one on my small account. The market reversed. Triggers rolled down, separated, odds favorable, and he has one of those 50-50 looks. He entered beneath the fib in the mid-band that were floating in the middle of nowhere. It overran for a bit and then finally reversed out at the fib, 23 ticks. And Pete, you're usually 6 ticks above your area, right? Pete has a plan for taking these trades in the middle of nowhere. When his large chart is so full of advantages, he'll get a little risky here instead of waiting for the confirmation. He throws a little experience and chart reading into it. And I know that he never puts a ton of risk on these trades because he knows that it could go up to here. Nice trade, Pete. Really well done. And once again, termination reverses the market. Oh, I like this one. Missed your stop by 2 ticks. I knew that one would have been close. Check this out. And Joel, this is a lot of what you were talking about. So termination, weak triggers right at a fib, and sure enough, we get a reversal. And that reversal creates odds favorable momentum and the potential to break. But Pete, you catch this up top. So when that termination rolls these triggers, Pete says, wait a minute, I've got momentum, everything's rolled, I had a termination. Let me take one of those momentum style trades. Let me take one of those, oh no, you tried to go long. You did you try to go long there, Pete, first? Entry, target. I'm not sure how that worked. I see short trades, but it looks like there was a long trade there too. Oh, that was from your previous long. Maybe? Oh, NT malfunction? So you get in below trouble with all of the momentum and carry it down to the potential bounce point. I like it. Base hit got paid. Love that. Base hit got paid. Momentum. Momentum. Do it. Right on, Pete. There's some inconsistency in that logic. You'll see a lot of profit stop outs in your trades because the object of the game is not to hit targets but to get paid. I guess that could go either way. If you hit your target and refuse to get paid, then that's a problem. But if you get paid right at your target, I see what you're talking about. Okay, let me talk about this one. Profit stop out. With everything on its way down, ladies and gentlemen, Pete says if I get a close on the wrong side of the triggers, that's my profit stop out. It's better to take the money than to hope. Okay, I'm with you now, Pete. It's better to take the money than to hope the money comes up because it's already there. I got you. Sorry, that took me a second. All right, Rob, here we go. So the market moved below my original entry. When price gets back to original entry, do I buy it again? I don't know. What do your rules say? You had momentum. You didn't have a clear path. You just jumped in. It made it to the problem area. It told you there was a loss of momentum. And you have $400 worth of risk on the trade. Rob, I don't know. I don't know what your rules are. And I don't tell people how to trade. So I'm not sure what kind of trade this is, and I'm not sure what your management plan says for it. But for me, if I just jump into a market, a loss of momentum is reason to exit. If momentum is what gets me in, loss of momentum is what gets me out. But without a copy of your trading plan, I don't know. I don't know. Momentum is up, 50-50. You already have two divergences in the same price range on a 50-50. Do you see how I can't tell you to buy again? Because you've already blown through your exit conditions. You are still new. Why did you jump in? Momentum, right? It's okay, just listen, you don't have to type. Did you jump into this trade because of momentum? Yes. Does it stand to reason that a close on the wrong side of the triggers is a loss of momentum and therefore your advantage is gone? And therefore, it would be acceptable to exit that trade and see if it turns into a trend trade. At which point, you could say, this one didn't work out. I'll get into the area inside of triggers and my stop will go 4 ticks below it instead of 72 days down here. We've talked about it 50 times. Why is your stop all the way down there? I would love to hear what the logic is on that. Odds favorable, clear path. I like it. Your area inside of triggers was at 62.98. Once it hits it, 4 ticks below it is right there at 61.75. The trade didn't work. No, Rob, you're getting stopped out because you don't have a plan. You jumped in with momentum and refused to exit with a loss of momentum. And your stop is $800 or $400. Eight freaking points. You didn't wait for the area inside of favorable large triggers. You don't have momentum in your favor. And your stop again is huge. What's determining your stops? Have you heard in the room where I teach every day? Every day, Rob, every day. I want you to listen, and I want this to piss you off a little bit because something isn't clicking. Every day, If the market goes 4 to 5 ticks below those trigger lines, if the market goes 4 to 5 ticks below those trigger lines, hold on, we're going to the slideshow. We're going exactly to what I teach each and every day. And Rob, I want you to memorize this freaking picture. Hold on. Sorry if that's uncomfortable for anybody's eyes. Rob, I want you to memorize this picture, okay? I want you to take it. I want you to embrace it. I want you to love it. I want you to commit this thing to memory at such a level that you will be mad as all fudge if you put your stop down here. And Rob, this is 6.5 points. 6.5 points. This is 7 3/4 points. So lovingly, I'm calling bullshit on predetermined, because that's a different stop than this is a different stop. Your ATM strategy is exactly the same. So it's not a predetermined stop, Rob. I see everything on your charts. This is you hoping to hell you don't get stopped out. Stop taking such big losers if you feel like you're sick of taking big losers. And there's your momentum trade directly into trouble. That was the first one. Does that make sense? Are you sick of it, Rob? Are you tired of taking those damn big losers? Stare at this freaking picture for the next 3 hours. And I sent you a dissertation on Sunday with everything that I just told you right here in the classroom. You know, that's fair. If it's lovingly, I'll take it. But Rob, I'm telling you, we've figured out what your challenge is. We know exactly what your challenge is. And now it's up to you to fix it. Now it's up to you to do the work and fix it. $20 stop. That's a $200 stop. You could have had 5 ticks. You could have had a $6 stop, which leaves $14 in the kitty for you to have for the next trade. Does that make sense? Every time you give away $20 instead of $5, that's $15 that you're throwing away. So why did you take this one? You didn't have momentum. Everything says up. Smalls are above the large. Everything's flat. You didn't have a clear path because all of your trigger lines are above. Do you see how the annotation doesn't fit? But because you're up $5, you're holding on to it, and you still have 7 3/4 risk on this trade with every trigger line above support, with the small triggers above the large. Does that make sense? So let me show you this. This is going to be good for you, I think. So let's take your chart and do a visual. You'll like this, I think, I hope. I'm optimistic that you will, brother. We got you. If momentum is my reason for entering, a loss of momentum shows that my advantage is gone. Give me a Y if that makes sense to everybody in the room. Give me a Y if this makes sense. Yes. What is a loss of momentum? A close on the wrong side of the triggers, Rob. A close? No. A close on the wrong side of the triggers is loss of momentum, which is 59.52. Which means you could have 5 ticks of risk. Okay, so I'm going to get rid of these. If price reaches that reversal bar marker, it will be an up bar against my trade on the wrong side of triggers. Does that make sense, Rob? If price right here goes up and hits that reversal bar marker, That's a loss of momentum. You're on the wrong side of the down triggers. And see how right here where it closes on the wrong side, it goes up. And the market kept going down until that happened. So if you're just going to jump into a trade, as long as you are left of those triggers, up or down, Rob, as long as you are left of the triggers, up or down, you still have an advantage. The second you get a red bar against all these green bars, that's it. This trade is over. It's done. No more. Don't leave a shit ton of risk on it. I sent you every one of these. So what you've got to do is you've got to eliminate a little bit of hope. But I want you to see 7 1/4. And this is what I want you to commit to. Okay, so 7.25 times, it's MES, we'll go 125. It's $9 worth of risk. That doesn't feel right, hold on. 7.25 times, no, that's right, okay. And then 7.25 times 5 is 360. Big difference. Over double the risk. So think about that. Man, it's just momentum. And there's divergence. And all my triggers are up here. I don't have to be in this trade forever, man. It's either going to win or it's going to lose. You'll never know what it's going to be. But your advantage is gone once you get to the wrong side of those triggers. And the same is true on this one. Your advantage is gone. 4 to 5 ticks below those triggers, man. You are not in the edge anymore. You don't have that best of the best look once you get below there. So that ATM strategy, if I buy it right here, it's 12 ticks. It has to go 4 to 5 ticks below. I can move it. I can click on it and I can move it. This is the only place where I can honestly say the market should not go if this is going to be a long trade. And obviously, I'm directly into a termination. I don't have any areas inside of favorable large triggers. I'm on the wrong side of odds favorable momentum. What a silly trade to take. But if it was a high probability trend trade, 4 to 5 ticks below the triggers every time. So if I enter the market again, and let's say that my stop is all the way down here, right? ATM strategy all the way down here. I got to say to myself, this is freaking ridiculous. If it goes lower than that, I don't want to be in this trade anymore. That's not my trade anymore. That's a crazy spot to still be in a trade, right? And then if I get a reversal bar, Rob, I click it again and I say 2 ticks below. 2 ticks below that bar, that's it, man. And my risk is virtually nothing. So be okay moving your stops, guys. And I think that's normal, and I think that's natural, and I think a lot of people do that, is they set their ATM strategies and then they just leave it alone. But you have to be active in management. You have to be very active in your management, and that's why one of the easiest ways to kind of get your poop in a group with management is the KISS plan, because it tells you exactly where everything has to go. And then once again, straight from the client trades, from the spreadsheet that I give out every day, I don't know if it'll let me copy these and paste them in, but, well, now you know what it looks like. There's the exact thing that you're looking for. You're looking for the area inside of favorable large triggers because it creates the advantage. You're waiting for, and your stop goes 4 to 5 ticks below triggers. You're waiting for the reversal bar and you're reducing risk even more. If you hit your first target, you're not going to risk any money because our goal is to get paid. And if it hits your second target, get the hell out. You're done. You won. Great job. And guys, I'm telling you, management's the hard part. Finding a way into the market is easy. Watch how easy it is to get into the market. You guys are going to love this. Watch this. I'm in the market. May not be the right trade, but that's how easy it is to get in the market. It's what you do after you enter that's going to determine what your life looks like as a day trader. Rob, great pictures, great lessons. I appreciate that because I think that lesson's not just for you, man. That lesson's for all of us that struggle managing trades. That lesson's for everybody that moves stops too soon. That lesson is for each and every person in this room that leaves way too much risk. Once you say to yourself, these are my advantages, oh crap, my advantages is gone, it's okay to exit. Does time affect three divergences that are close in price that look like it sank real quick? Nope, time has nothing to do with it, Jeffrey Dean. Good question. So check it out. So this is, and look at, if we just draw a box around it, can we agree that in this range right here, the buyers tested the waters, stole some momentum, and the seller said, yeah, no. And the buyer said, you know what? Let's test the waters again. And the seller said, do you see this line? Yeah, no. And the buyer said, we're going to try again. And the seller's like, hey, go F yourself. Three divergences lets you know that these guys are fighting each other. Three divergences lets you know that one of them's going to win, but you don't know who, but the sellers aren't able to get anything done. Guys, the idea, the same thing that you use for areas, once my small and large get below the third divergence, we reset. We start over, man. The fight's got to be good again. So time doesn't have anything to do with it. Price and those trigger lines are going to let you know exactly. But as long as you see the fight, it's okay, right? I'm not going long, but I got to pump the brakes on a short. Because it would have been easy. It would have been really easy to get stopped out right here. And it would have been real easy to get stopped out right here, right? And then if you're like, oh, it's three divergences, I'm going to go long, then you get stopped out going the other direction. Just let them fight, Jeffrey. Does that make sense? Let them fight. These three divergences are a huge visual on the small chart that the buyers and sellers are just duking it out. And hell, who knows what's going to happen? And eventually you may use a large chart and say, well, the large chart's odds favorable, momentum down. As soon as that fight's done, I'm on these guys. I'm going to go for it. But that's a great observation. I like the timestamps, looking at it and kind of factoring it into there. But yeah, just remember, that's a fight, right? There's a fight, there's a fight, there's a fight, there's a fib. And then this is a great example. Pete says, because of the termination, because of this level of momentum, my patterns say that we're more likely to hit this fib than we don't. Does that make sense, everybody? And Pete says, because of that, once I get below these one-to-ones, and I don't believe one tick is efficient at all, but it fits Pete's plan, he says, I'll sit through all of this BS because the large chart says 05 is where we're most likely to go. And notice that he didn't hope 05 broke because he already saw the fight that happened. The closer you get to the areas, you can see where the sellers keep testing the water or the buyers keep testing the water. Are the sellers really going to keep pushing? Are they really going to try? Let's sacrifice a couple contracts to see what their reaction is to the resistance. I like this picture. Nice one. And guys, we've made it through all the pictures. Hopefully there's some good lessons in here. Termination's still holding, right? One divergence, two divergence. Guys, if it's going to go up through this area, your triggers are going to break it. That's just, it's a fact of life. If it's really going to go up through this area, the triggers are going to break, that everything's going to roll. You'll find an opportunity. Wow. Large chart said up. Large chart had momentum. That was an area inside of triggers. This was a little beyond. That was right at it. And sure enough, guys, that's producing a pretty good one. The challenge is how many people didn't take this mid-band inside of the triggers because of the two divergences. Anybody? Nobody? This one, the area was on the wrong side of the triggers. What a great reason to wait for a confirmation bar. Because price definitely got 4 or 5 ticks below the triggers. Where do you put your stop? This one was on the wrong side of the triggers. Once again, great way to wait for a confirmation bar because it went 4 or 5 ticks below the triggers. Where do you put your stop? This one was right at the triggers. 4 or 5 ticks kept you safe because you had an area inside of triggers to create a bounce. And ladies and gentlemen, that one rocketed straight to Fibonacci resistance with odds favorable, momentum, and a clear path. If you missed that last trade because of 2 divergences, guys, you got to understand, with odds favorable and a clear path, it takes 3 to keep you out of a trade. And now we're in a holding pattern. And they're trying to break resistance, and they're getting close. Not quite there. Guys, what would you like to talk about? What's on your mind? Guys, I want you to be okay to post pictures of things that aren't quite right. I want you to be able to post pictures where you need help. I will give you help, and I'll give you the tools to fix whatever's broken. What's the old adage, though? Horse to water. I can give you everything that you need. I can give you all of the answers, guys, but I can't make you do the study to put it into play. I can't make you stop thinking about the money. I can't make you stop hoping. But I can tell you, trading directly into termination conditions is rough. So Pete, the white bar trade, I'd love to. Let me build a market flow chart. Guys, I don't even keep market flow charts on my workspaces because typically I don't teach the market flow. But let me build one real quick, and I would love to talk about it because I am a big fan. In order to take it, you do need the market flow with the fast triggers on it. That's a big part of it. You can post yours too, Pete. Let's look at them. But we'll go through and see if we can find some opportunities. And with all of these termination conditions on crude oil, we probably will. So, guys, let me know if this gets too tight. I'm going to do, actually, you know what? I'm just going to do the large chart and the range chart. We won't even look at the other chart. So Pete, the first thing, and we'll do the prep work on the large chart, ladies and gentlemen. For that white bar trade that John Novak teaches, you have to have a no triggers through termination condition. That's not it. That's not it. That qualified. That qualified. And that qualified. So rule number 1, guys, for this white bar trade that John Novak teaches is a termination condition on your large chart. But you want that termination condition to be confirmed on your small chart as well. There should be fibs, stuff like that there, because this white bar trade is the first shot at taking advantage of an area that has the potential to reverse the market. Guys, you're not waiting for the reversal. So each of those boxes represent a termination condition. This one does not. That's the one that was in the middle. So we'll scroll back. Where's the first one? There it is right here. When I have a termination condition, a couple things have to happen on the range chart, Pete. And anyone else looking for this trade. I need a white bar. This is what's called a breakout bar. The white bar is the breakout bar. And it's this white bar that's followed by the second up bar that creates this green line. And this is your HVA line. And the HVA trade says, from the termination when the triggers roll, buy a pullback to the HVA line. Guys, sometimes that doesn't happen. Sometimes it doesn't come all the way back to the HVA line. So the white bar trade, Pete, says, let the fast triggers roll, these lighter triggers roll, and when you get a white bar, if you get a pullback to those fast triggers up, you enter right at that pullback to the small triggers. Your stop goes below the white bar. Those are the rules. This one didn't set up. It never gave you the pullback. So go to the next box. There's my termination. No white bar. There's a white bar with the triggers rolled directly into a fib. I don't know what that looked like. And then there is the second chance. And this bar pulled back to the small triggers right there. And that's the one that started the move down. This one failed. This one worked. It's not a high probability trend trade, but that's the look. Termination, fast triggers roll, pull back to the fast triggers. And it's a tiny little loss, guys. That's like a 5-tick loss. So Pete, termination, white bar, and then it pulls back to those fast triggers right by the white bar, and then that's your push down. Termination, white bar, probably didn't get an entry because it didn't pull back to those fast triggers. Termination, white bar, there's where it pulls back to the triggers, and sure enough, it heads down. Termination, you never get your white bar. There is no white bar trade. Does that make sense, Pete? But that's the recipe. That's exactly what it looks like. Let's see what yours look like. Not enough information to even talk about it here. I don't see a white bar trade because I don't think we had a termination anywhere, but I think that's the one that didn't have it. That was your term, and there was no way in. And then, guys, there's so many ways to use the market flow chart. And Pete, you might appreciate this one. I'm going to show you guys a really cool pattern, you market flow traders. You guys that use this chart, that understand this chart. When I have odds favorable momentum, Pete, and everything is screaming to the downside, this pattern of an up bar, down bar is a great accoutrement to a momentum trade, and then your stop goes behind it. And then if it does it again with odds favorable, your stop goes behind it. And then if it does it again with odds favorable, your stop goes behind it, your stop goes behind it, and the same is true coming up. And this pattern right here creates opportunities. When you've got momentum on every chart, there's so many, Andy. There's so many. I like the up-down pattern because I think it creates an opportunity for management if you're in the middle of nowhere. I love the up-down pattern because I think that if you're lining up with a momentum trade, it creates an awesome opportunity. And let me show you what my up-down pattern looked like this morning. I think I took one. That wasn't it. That was yesterday. I take a lot of pictures. I don't know where it went, but I had one. I think that was it right there. Well, the white bar trade has nothing to do with exits, Pete. And that's the thing, is the white bar trade has nothing to do with exits. The white bar trade is an actual trade to get in. So one thing, Pete, that may get you your alertness up. If I'm about to reach an area and there's a breakout bar into it, right at the area, I get that white bar into it, I'll tighten up. Just normal exit conditions. Hit a fib, get out, right? But if you're in between fibs, you're already good at holding it. But yeah, that trade has nothing to do with management. That trade has everything to do with entry. Anybody catch this one? Did anybody take that momentum and the potential to break and no divergence and the perfect entry and take that bad boy all the way to the fib? Morgan, are you going to show me that you went all the way to the fib? Because, dude, I'm going to book a plane ticket to California and high five you. Man, great job. Is Josh in here? Oh, Josh probably has to work. Nope, Josh, tell me you got it. And tell me you held it. Who else was talking about you didn't take it because it's 50-50? Okay. Was it Iron Mike? Are you in here, Iron Mike? Said that he didn't take 50-50 trades. There's a way to take a 50-50 trade, guys, with the highest chance of success. Let me open up the KISS plan real quick. So the KISS plan talks very much about the high probability trend trade. And it goes into that 50-50 trade. And that's exactly what this is. So, Josh, this is your next set of rules to memorize. This is the absolute, positively best of the best way to take this 50-50 look. So we're going to do this real quick. I want you guys to see this. This is why I'm such a big fan of Know Your Rules. So you're looking at your large chart and you're saying to yourself, oh man, this is one of those 50-50 trades. The large triggers aren't through. Let me go through it. Am I coming from a strong top or bottom? Well, yes. Do I have odds favorable momentum? Absolutely. Do I have it on the small chart too? Better believe it. No divergence? 100%. Get in at the area. Guys, this is the best of the best way that you could ever take a 50-50 trade. Divergence kills these trades. Weak bottoms kills these trades. You had so many advantages in this trade, and it did everything that we would anticipate it doing. Absolutely beautiful trade. And guys, if you're not taking the 50-50 trade yet, that's okay. This is where you should take that picture right here. Let me share the link. If you're not taking the 50-50 trade yet, guys, that's totally cool. But I want you to steal this picture that I just put the spreadsheet on and start studying the patterns. And I want you to probably steal Morgan's picture because this is beautiful. He talks about the strong bottom. He talks about momentum. He talks about no divergence and says this is as good a look as it can get for this trade. 2 ticks above the mid band, right there at support. KISS plan the first. Second target, 2 ticks below the fib. Morgan. Virtual high five, my friend. Guys, that is how you take a 50-50 trade. Textbook. And Morgan, you held it. Because Morgan, what changed once you got to your first target? Nothing changed. Guys, if you don't believe that there's power in posting in this room, I'm telling you, once we identify what your challenges are because you present in this room, I promise you we will find a way to work through them together. I'll give you everything rattling around in my giant head to make sure that you can read the indicators to give you the highest chance of success. All I have to see, guys, all you have to do is just show me your charts and tell me what you see. And with Morgan's amazing trade, and you know what, Morgan, I think people need to learn how to take the 50-50 trade. I think they need to believe that they don't have to be in every one of them. So I'm going to put you in the spreadsheet for the masses to study. I hope that's okay. because I couldn't I couldn't put together a better lesson than you did. I couldn't. You touched on everything. And now, Morgan, when you go back and look at this trade tomorrow, you're less likely to talk yourself out of it because you know that that's the best of the best. I love it. All right, guys, I'm going to take 5 minutes. When I come back, the classroom belongs to you. You guys are going to have to tell me what we're talking about. You guys are going to have to ask some questions, post in the room. You're going to have to give me a little direction to make sure that I'm talking about what you want to hear. So I'll see you guys in 5 minutes. Go stretch your legs. stretch. Areas break, don't they? Man. And when they do, resistance becomes support. Pretty cool, right? Happens a lot. Guys, what do you want to talk about? Weak triggers. Uh-oh. You're taking a lot of picks. Makes a difference. Weak top, all triggers broke, turns around, potential entry, too much risk for me, approximately 20 ticks. Strong bottom, higher divergence, I love it. So Kurt, how can we mitigate that risk? How can we take that 20 ticks risk and make it smaller? When you have this look, when it's that strong, wait for confirmation, right? And it worked out with that level of momentum. Exactly, Rob. We'll go back and find some pictures for that, and I'll show you exactly what it means. But yeah, Kurt, that little thought process pays dividends, right? Because now your risk is established. And with this level of momentum, man, life's pretty good. I dig it. What's this yellow noodle running? VWAP? Cool. How does that... Do you use that for rules? Does that work its way into your rules? Or does it just make you happy to see a VWAP? It's fun to say. I think there was a really popular song about the VWAP. I'm always interested when I see, sometimes it strengthens spot. Okay. I don't know anything about VWAP, so I like asking you guys when I see these other indicators on there. It's just an opportunity for me to learn. Just an opportunity for me to learn. So that's awesome, dude. I like it. So how do I mitigate the risk? Does the VWAP help here? I've been institutionalized. We're okay. Does it help when it lines up with the midband and fib? So a confirmation bar off of your VWAP might be even stronger, right? With this look. How do we work it into a plan? I love it, man. I love it. That's how plans are built, guys. You take a bunch of pictures and you take those. Okay, I didn't get in. Here's why. Is there a way for me to get in? Here's why. Great picture, Kurt. Thank you for that. And I learned something today, which is kind of fun for me. All right, Rob. What am I looking at, brother? That's the same picture. What am I looking at? I see big lines. I see a termination condition. You're talking about that right there? Give me a Y if that's the right one. So right here, when it gets to the wrong side of the triggers, you said no momentum trade? You know what's even easier, Rob? No trades into fibs. Right? So even if the momentum fails, there's no trend trade. Perfect, dude. And that's exactly right. You've got the wrong side of the triggers. Bring this down a couple ticks. It's that bar right there off of the termination condition. And then if it's going to go down, man, let it break. Great job, Rob. And now you're thinking a little bit different, right? And it's going to help. All right. Here you go, Mark. Please beat this up. I took these trades 13-2, but this is 34-5, so I could show you all three trades I took today. FYI, I've incorporated FVG's fair value gaps into my Nexgen trading. It's been very good. Love to see where Nexgen signal equates to an FVG. As you can see, I always protect profits. All right. So 13-2. All right. You realize that this is difficult for me to really beat up Iceland because I can't see. Hell, I don't know what market this is. I don't know. And this is your large chart? This is a 34.5. Are you trading NASDAQ? Okay. I don't have enough information to really be accurate, but I'm going to try. Didn't jump in, or didn't get in from a pullback to an area inside of favorable large triggers. Right about here, there's no doubt in my mind, there was a close on the wrong side of the small triggers on your 13-2. I think you gave way too much back. That's my first one. When that momentum trade failed, Iceland, there's your pullback, probably to an area inside of favorable large triggers. This one says, let's go. Eventually, there were probably exit conditions there. Your exit conditions are exactly where you jumped in. And then it pulled all the way back to the midband, and you sat through that. And I don't understand why you sat through that, but you didn't sit through this. So I see an inconsistency in an exit plan. So you hold through all of that, and you say something clever under your breath like, holy shit, I hope this goes back up at the midband, even though the small triggers are against me. And it does. And as you're on your way back up to the promised land, you jump out for whatever reason instead of letting it hit the fib. Right? Right here you thought, oh man, I sure hope it doesn't retrace again. I mean, all of my indicators say up and I'm above the trouble spot and everything's doing exactly what I want it to do, and that's where it's probably going to go. But let me get the hell out just in case something goes wrong. And then you hit a termination condition and it pulls all the way back to the midband, and you don't just jump in arbitrarily, which I like. You say, check it out. We're in an uptrend, everything's going on. Let me jump in somewhere up here. And I'm not sure what it looked like on the small chart, but you are against momentum and path. And you said, but it's likely to go back to those large triggers. Let me catch a little cash right there. And they're going to make decisions. And if their decisions are to continue up, okay, I get above the 1-to-1s, and I tightened up my stop so much that they got me. And then there's my pullback, and then that was your next trade, probably. So what do I see from one large chart, Iceland? 1, your exit conditions are inconsistent. 2, your entry conditions are inconsistent. Just from looking, it doesn't mean that they don't follow your plan, but it means based on the location of your entries and exits, none of these trades are the same. Entry conditions here are very different than the entry conditions here. Very different than the entry conditions here. Your exit here makes no sense compared to your exit here and your willingness to hold here. Your entry here fights everything in trend coming off a termination condition. There had to be something in there that said get in. And that's the one that makes sense to me. And then this one, you gave it a chance to run and it didn't. Am I close? So show me your entry charts. Let's talk about them. Most of these you're trading with the trends, so I love that. I think that's brilliant. What a great way to stay ahead of things. But I bet you, Iceland, we could look at your entries and exits, and we could find a way for you to not hold so long, and we could find a way for you to not jump in right at the top of a move, and maybe find a way to make a little extra money. Just a thought, but I like it. It's hard to beat up, but it's pretty easy to read for me, just based on what I understand about trigger lines. Ah! Ninja Trader crashed. Oh, you're very welcome, man. Thanks for posting. And if you want to work through some of those entries and exits, man, I'd love to. That's fun for me. You guys don't get this. That is so much fun for me, to see your entries, your exits, to talk about it, to see what I can do to help. Like, that's my existence. I'm going to bring my Ninja Trader back up real quick. Yeah, that'd be awesome. That would be awesome. That'd be a lot of fun. All right, guys, what's next? What are we going to talk about? Oh, and you know what, Rob? I'm going to give you... no, we saw those pictures, and you did a good job of it, so we're going to let you go on that one. Did I, Pete? I'm sorry. Oh, I think I was on break. That's my bad. Let's check it out. It's funny, Pete. It always seems to be yours. It used to be Musers. It used to be I would skip Musers every day on accident. All right, so let's see what we have. Quick trend trade. You're in. Whoops, sorry. Charts are opening. You're in at 71.50. So you're in right at this fib. Lost some momentum. It's almost broken. I like that it went up. I do like that it went up. Anything can happen, triggers. You know it's not the best momentum. And I noticed, Pete, that you didn't take this one on the way down. You waited for it to start going up right at that halfway point of the previous bar, right at the key area. And man, what a great entry. What an intelligent, guys. This is Pete saying, I understand that this isn't perfect. So I'm going to make it get to the lowest area because that's the best, least amount of risk. And without all the momentum, it makes sense. And I'm not going to wait for the confirmation bar because there's not a lot of room to trouble. And guys, what he did is he entered when he hit the halfway point. Halfway up the confirmation bar. And Pete, I'm guessing you were 2 ticks below that one that got you in before it ever created a reversal bar because you knew it wasn't perfect. And it was worth a shot, but not worth a lot of risk. I'm telling you guys, I will get into your head. Pete, I like it, man. I like it. It's an intelligent chart read, and it's making a decision based on what your indicators are telling you. That's all you could ever hope for as a day trader, guys, is to make a decision based on what your indicators are telling you and learning how to tune out your gut, because your gut's going to lie to you. Your gut's going to tell you to have enormous stops, and your gut's going to tell you, hey, where are my charts? Oh, I forgot to connect. That's why. There we go. Your gut's going to set you up for failure, guys. Your indicators are going to give you the story. And then you just learn to trust them, and it takes a while. It takes a while to learn to trust indicators. It really does. But once you do, it takes a lot of the stress out of trading. I've been simulating and practicing a trade for about the last 30 days. I was a student of the ALE course that Nexgen has been talking about. Been a student of this methodology and learning it. And man, I've been on simulator forever practicing this stuff, guys. And that's what you got to do. You've got to practice it. And you've got to trust it. And I'm almost to the trust point. Almost to the trust point to where I'm willing to actually risk money because I feel like I'm executing with fewer mistakes and that I understand expectations. And that's all we do, guys, every day is we learn how to create expectations with the full understanding that those expectations may not be realized because we're never in control of the market. So we've got about 30 minutes. I think we're going to see some fibs up there. We'll let that load up and see what happens. You love making $1,300 in 2 minutes? Me too. It's fun. One of my demands before I take this new methodology live was that I hit my goals, and I'm going to hit my goals for 30 days in a row, and I'm going to really commit this in before I decide to go live. And I know that seems excessive, right? Mark, why would you stay on simulator for 30 days? Well, because if I can do it 30 days in a row, guys, on simulator, I can do it 30 days in a row live. And when I'm learning something new, things keep popping up. Things keep popping up. Man, we're close, Rob. We are so close. We're actually so close that I've got our website in my favorites, but it's not active yet. John and I should both be able to get in and begin to test the prop firm. We thought we had it the other day, but there was a little bit of a flub But I should be able to get in and use my TradingView account and actually try to pass a combine on my TradingView account, because that's one of the platforms you'll be able to use. And man, there is a huge list, and I thought that was pretty cool. Did you guys notice that, like, if you're in one of these prop firms, one of these newer ones, you've got like one choice. You're either a NinjaTrader, and there may be one other one. That's the, whoops, what did I do? That's the list of all the different platforms that are going to be available to Nexgen and available to you guys on the prop firm. And then, of course, Nexgen is also building their own browser version. And it's just waiting on programmers. Nope, NinjaTrader will not be an option, Rob. But the plan is that the prop firm goes live when the platform is live. So you'll have access to John Novak's new platform for the prop firm. And I'm not 100% sure, but typically, if you're in the prop firm, they give you something to run it on. I don't know how that's going to work. I don't have all the answers, so I try to avoid giving any answers. But I do know that it's close, and I do know that I submitted my email and got all my confirmations, and then we found a bug. So we're working out that bug. Hopefully it's worked out today or tomorrow, go into next week full throttle. But John Novak refuses to release until it's perfect. And I think that's a great approach. All right, guys, 11:25 in the morning. That guy is studying. Not a clear path down. Divergence, split triggers. If you tried to capitalize on momentum, a close on the wrong side of the triggers killed it. Pretty cool. Love that. If you were in a long trade here and you said, I'm going to wait for a loss of momentum to get out, you didn't get it until right there. Abby and Libby or Delphi, I don't know what any of that is, so I'm just going to say no. I'm not sure what that is. I'm not in any circles to hear anything, though. Like, if it's investment related, you guys are my circle. John Novak is my circle. I don't hang out with traders very often. I don't hang out with clients that often. I enjoy it. I enjoy meeting clients. I've played golf with several. Working on annotating charts, I like it. I like meeting you guys. But I don't read the financial news. I don't subscribe to Forbes magazine. Oh my gosh. Haven't heard anything about it. That's sad. That's sad. There's bad people out there. Don't be one of them. What would you guys like to talk about? The S&P has triggers up, triggers down, splitting an area, divergences below, close the gap to the triggers. I can't find a whole lot going on there that fits my trading plan. Let's open up crude oil. Nothing worse than a crash. It happens, though. It happens. So we'll get crude oil up. I don't know what that pink line is. Does everybody recognize this as a bad top? Not coming from a termination condition? All that momentum directly into support. 50-50. Oh, there's that divergence. There's that divergence that kills 50-50s. Anybody take it? Or did everybody say, man, that doesn't fit the plan that optimizes my chances of success. It's okay for me to not be in this trade. And if you did take it, you might have made some profits and then went break even. Or exited with a second higher divergence and lost a tick or two. And that would be okay. That would be great management. What's awesome is you'll get to the point to where you'll take medium probability trades and you'll be able to manage them so effectively that even trades that fail, you're going to find a way to get paid on. That's one of the things John Novak is brilliant at. You don't take them. That is inside the synthetic triggers. Right there. That is precisely inside of the synthetic triggers. These are the only synthetic triggers I have. Do you mean over here? Those are just large triggers. So the synthetics have the steps. It's just the large triggers from this chart. The other ones are just large triggers. This might just be a language thing. Oh, over here, yeah. No. I've got large triggers down, small triggers up. Synthetics way down here. Yeah. No, that's okay. I was talking about this one. This right here, this would be trying to capitalize on the area that held, that reversed. And that would have been when a fib holds and it pulls back to the small triggers. That would have been a super low risk possibility. But with these large triggers still down, low probability. It may go up from here. It's more likely to dance because look at that. We've got 2 fibs and 1-to-1s. We've got 3 decision-making points and indecision in the trigger lines. Does that make sense? If all we're talking about is what we see, I have 3 points where people are making decisions and I don't have any triggers above them. And I definitely have large triggers well below them. And now I'm getting 2 losses of momentum and I'm below the small triggers, so it can't be one of those jump in momentum trades. And why don't I just let them fight it out? Why don't I let the large crowds duke it out here? It'll either go up or down, guys. That's my promise. That's the only thing that I'm sure of. It will either go up or down. The chances of it stopping cold right here and never doing anything again are pretty slim. Does that make sense to everybody? If you pass a 1-to-1 on 71.90, it'll go up. Well, Nanda, it would have to go up to get to 71.90. But 71.90 stopped it cold. I see what you did there, though. Guys, I don't play that game. What's it doing now? Yeah, so 71.90, you have these pink 1-to-1s. These are meaningless in the grand scheme of things. These don't fit as termination conditions. That was impactful, right? It did happen, but it's rare that it does. But if you keep it simple, right? Hey, I don't have momentum. My path isn't clear. I'll sit on my hands. Is it going to go up or down? I don't know. I don't know, but I couldn't go long yet. And it still may go up. And Nanda, you're right. But now it's a divergence high that I really want to see it break. And you use those pink 1-to-1s, and some people use them very effectively. I don't teach them as termination conditions, so they're not even on my radar. And in this case, they're on somebody's radar, for sure. But my large trigger's never set up, right? The buyers tried to push up, and the sellers really said, you're not even pushing hard enough to roll the large triggers, guys. You couldn't even get the small triggers above. Now everything's rolling. But I'm right back to that support that created a giant bounce. Whew, man, 90% of my day is letting these guys fight it out. It's kind of fun when you start talking about it like this. What's happening? They're fighting. How do you know? Because it's not going up or down. The triggers don't agree. The background doesn't agree with the triggers. They can't get them through areas. You are literally watching the fight. But what do we think about this? Now we've got smalls above the large. We're right back to support. This is where we say 56, 57. It's either going to rocket this mofo to the upside or the sellers are going to take over and drop. But I'm not trading into it because I don't have any momentum. And my path is totally not clear. I got 32 pounds of nothing to do, guys. My trigger lines don't agree. My path isn't clear. Looks to me like Chicago's heading out for hot dogs right now. Going to get some deep dish. For those of you that are thinking, well, I'm going to go long at support. See how price hasn't closed on the wrong side of those small triggers? That would be a tough fight. That would be a tough fight. What do you guys want to talk about? I'm going to mute.